one thing I learned at Sequoia is that we are always as good as our next investment. The moment you're happy with where you are, that's the moment you start to lose. Eventually, all my companies are for sale at the right price. I'm not a collector. I'm an investor.
Gili, I am so excited for this. Listen, we met on the ski slopes in Megève a couple of weeks ago, or a month or so ago. I've wanted to do this ever since hearing you speak there. So thank you so much for joining me today.
It's a pleasure to be here. I'm very excited to have a conversation. And, I would be even more excited if we can get back to some skiing together.
Well, if you'd noticed, I don't ski. I'm like Bridget Jones on the ski slope, Gili, but I really appreciate that. I would love to start, though, with some of your early years and move away from my skiing elegantly. So I know it's a weird one, but I think childhoods actually inform a lot of who we are. How would your parents or teachers describe the young Gili?
I grew up in a small town in Israel, which, is probably 15 miles away from Tel Aviv, but it's in that period of time, Tel Aviv could be on the moon. As far as I'm concerned, it was so far away for me. And, I grew up as my parents would probably tell you that I was a bright student that never made prepared homework, and the teachers always complained that whenever they asked me to read my homework assignment, I would stand up, very casually read out of my notebook, the complete answer that I was supposed to make last night, and then when they approach my desk, they'll figure out the notebook is empty. And I was just making it up. And I think that characteristic of a smart and somehow lazy child, was one of the driving forces behind my career. Because unlike young people today, I was introduced to my first computer. It was a Commodore 64 computer, if people still recall that magnificent machine. And I had to choose it. I was not born with computers. And when I faced that machine that, I could tell it what to do and it would do it repeatedly without getting tired, without complaining, as a gifted and somehow lazy person, I really like the idea, and that I think what attracted me to the whole tech scene early on. Can I be really rude? Do you think you're still lazy? In a way, absolutely. I think that laziness in the right combination is a wonderful trait. It makes you think about efficiency. It makes you think about not repeating tasks you don't like and focus on the things you really like and you're really good at, and to find combination. Even forming a wonderful venture team is all about filling the gaps and making sure that the different elements are significantly better than any of them, alone. I spoke to one of the greats the other day, and they said the most important thing a founder can look for in their VC is a lazy VC, because truth be told, VCs don't add value, and the best founders build the companies themselves. So if you pick anything, pick a lazy VC. Do you agree? Well, I think that lazy is probably in a different context. I think that as a founder, I wouldn't say you pick the lazy VC. I think that you pick early on, at the seed stages. I would go, if I'm an entrepreneur and I like to build a large business, I would go after the style of company builders. And there are many terrific investors who are not company builders. They are simply terrific pickers In every successful company, there was at least one board member, and typically one board member. That's he or she are the first call for the CEO. And they're in the room whenever the big decisions, important decisions are being made. That's the type of investor you like to join you for the journey of building an important company.
Speaking of kind of types of investors, I do want to kind of just follow some form of chronology before I just get lost and pepper you with questions. Your first venture role was with Sequoia. How did that come to be? And what was that entry like? Can you just take me to it?
Yeah, absolutely. I was not an unknown entity for Sequoia. I joined Sequoia in 2009. But Sequoia invested 12 years beforehand in my first venture. It was 1997. I was 27 years old. That was my first startup. And they invested in that business. It was a terrific team. Pierre Lamont from Sequoia was on the board, and we were the first team to build a WAF, a web application firewall. In the late 90s, that was a big thing. Eventually, the business was acquired by IBM. I went to start another company and then relocated back to Israel. Was lucky enough for Sequoia to look for a new partner in Israel. I met the local team in Israel, and then I got to meet Michael Moritz. He interviewed me, and that was it. I was becoming part of the team.
What was that interview with Mike like?
Mike is a terrific, deep, thoughtful human being. Consider him a friend and try to speak with him as frequently as I can. The interview with him, I came in charging forward, eager to tell him about all my amazing accomplishments as entrepreneur and techie. And he was simply interested in what did I do, but why did I pick to do that? And, I had to slow down. I realized this is a different type of interview. And I had to focus and talk about, what drove me and what's my motivation. And it was a very different interview. And it taught me a lot about what's important when you like to get to know someone. You get to know someone not by looking at what, the list, the inventory of their doings, of their accomplishments. You get to know someone when you understand why they pick to do that. That would tell you much more about that person.
Is there any wrong answers to the why? And sorry, I know we're jumping around, but I'm just intrigued. Often we demonize, I really want to make a lot of money, or I really want to be very powerful in a sector. And we demonize that. Is there a wrong answer?
I don't think there's a wrong answer. It just, depends what the goal of the interview. But typically, I think that Mike liked to get to know me better. And when I talk to entrepreneurs today, I like to understand them. And, that understanding would help me predict their behavior going forward. So give you an example. You said, you gave the example of, I like to make a lot of money. One of the questions I try to understand is, are you after fame or fortune? And you can get to real greatness by chasing fame, and you can get to real greatness by chasing fortune. But understanding what's driving you would help me better understand you, would help me better help you and become a better partner to you.
I remember getting asked that once by an LP, and I responded, can I not have both?
Definitely you can. You can have both, and some people have both. But what's driving you? Typically, you know the answer.
No, I do agree with that totally. And I think it's really important to understand the why and not the what. In terms of like that being a lesson from Mike, in terms of lessons from Sequoia before we dive in, it's a very transformative place in terms of how one thinks, especially as an investor. Are there one or two takeaways that really impacted your mindset that you took with you to Cyberstarts?
I think it's a long list. I spent more than a decade with Sequoia, and it's a terrific team. It's a terrific venture team, and I learned so much. For me, I told you about my early days at that small town in Israel where, playing football, soccer, was the one thing that kept us alive. Becoming part of Sequoia for me was like playing for Manchester United. It's the same game. The same rules, the same 11 players chasing a ball, but it's a whole new level for quality, the combination of quality, tradition, and performance. And if you look just for one element of that, if you look for quality, if you look for tradition, if you look for performance, there are many clubs you can follow. But if you look for that unique combination, probably Manchester United is the team you like to play for. And I really felt like, I'm playing for them. I learned the power of brand.
Can you just unpack that? If we just do one by one, learn the power of brand. In what way?
The venture business is a service business. You provide services, and once it's very hard to tell, if that service provider A is significantly better than service provider B, because what you sell is cash. Once you manage to create brand for yourself, and Sequoia is probably the biggest brand in the venture business, you create an amazing cycle where the best entrepreneurs like to work for you or partner with you. The best executives like to work for your portfolio companies. All other investors like to invest in your portfolio companies, and the game becomes easier and faster and allows you to do great things just because of brand. Beforehand, I spent 10 years working for the Israeli NSA, and then in 2 small startup companies I've founded. I never worked for a terrific brand, and working for Sequoia, you felt the brand. You felt the power of tradition and quality.
Well, I want to touch on the performance element too. You said about the level of performance. Can I ask specifically, what is it about the performance? Is it how they structure meetings, how they structure discussions, the intent? What makes Sequoia's performance premier above others?
I think it's something I take with me to Cyberstarts today. It's, endless hunger. Endless hunger. You're never satisfied. You could pick Google, you could run the biggest IPO. The next day, you run a meeting and ask yourself, how can I do better? You're never happy. So maybe it's not a lazy investor. Maybe it's the investor that's never happy.
Is that you? Like, does that sound like a nice way to live? And like, can you win and not be that? Because that is, like, respectfully, I think you should appreciate your wins. If you want to be in this business for 40 years, just beating yourself for 40 years is hard. Like, there are moments when Wiz will IPO and you can sit with Asaf and say, yeah, that was great. And, well done. And well done to both of us. I don't know. I do struggle with this one personally, Gili, because I don't know what the right answer is there.
Respectfully disagree. I was spending time with Asaf till 1 a.m. this morning, and I was giving him crap about something. And, The moment you're happy with where you are, that's the moment you start to lose. The moment you start to believe that you know a lot and you're experienced and you're simply amazing in what you do, that's the moment you start to make mistakes. So questioning yourselves and, beating up yourselves for, anything that you could do better and chasing real greatness, I think that's the only ways to stay on top of the game. And the moment I'll be happy with, Wiz goes public in, I don't know, in a year, in 2 years, in 3 years, and it's a $50 billion business, the fastest growing company, ever created. If I'm happy about it, I should retire.
We mentioned Wiz there. You mentioned being on the phone to Asaf until 1 a.m. When we've spoken before, you said you invest in people, not in products. And I wanted to double down on that one and just unpack that. So why people, not products? And how does that lead your thinking when investing?
That type of thinking changing me considerably since the early days for me as a venture capitalist. Because in the early days, I was looking at markets and total addressable market, TAM, and technology and differentiators. And I simply realized that all of that is bullshit. It's not important at all. The only, when I meet a team of entrepreneurs, whatever they tell me, even if they tell me the truth, and often they don't, but even if they tell me the truth about, the market they want to go after and the technology they've built, in 8 weeks, that would change, considerably. And in another 8 weeks, that would change again. So why would I spend calories on something that's so temporal in the life of the venture, while I could spend time on the most stable element in the venture, which is the team? The team would change, but it would not change as dramatically as the market and technology. And when you bet, and there's another reason for that. When you meet a young team, young for me now is embarrassingly old age, but when you meet folks that are 25, 27, 28 years old, that's probably they've done like 2-3 jobs in the market. They haven't been senior executives in any business. To really expect them to come up with brilliant market analysis and justify why they are getting into a $5 billion market, I think that's setting the bar way too high.
I'm 27. You should slam me as an LP if I'm not incredibly honed on where I sit, market analysis, where the future venture market is going, just in terms of thoughts. I by no means comparing myself to any of these names, but the Collisons, your Alex at Scale, the best do, no?
That's not my experience. My experience that many times those young individuals, they make horrible assumptions on the market or on go-to-market, and that's not the right measurement to pick the best teams. As time went by, I became more and more purist in my approach, to the point where I started Cyberstarts in 2018. I decided that I would not even ask them about market or technology or product, So I meet with a new team, which I don't know, and we spend an hour, speaking about their childhood and their mother, and not about products or technology. that's enough to really pick amazing teams. And, my assumption is that if they have a terrific idea, that would be a nice bonus. If they have an okay idea, mediocre idea, I'll help them improve it. And if they don't have an idea at all what to do, that's even better. I'll work with them, and we leverage the entire Cyberstarts platform to really help them pick a significant pain point they can go after and build an important company. And we've done it, multiple times successfully.
A mutual friend of ours, Doug Leone, says, a very similar thing in terms of how he really evaluates people, especially when hiring them. And he says he looks for the kind of misadjusted children, the ones with the chips on their shoulders who were bullied at school and got beaten by their older brother or sister. That's his signals of someone that excites from a potential perspective. In that conversation on childhood, mother, family, father, what are your signals that excite?
I listen to their life story, and I try to understand the why they did what they do, why they move from station A to station B in their life. And I'm looking for early signs of them being unique or simply excellent in something. And it doesn't have to be tech. The other thing I'm looking at is whether they've gone through real life difficulty. Have they gone through something that's really difficult and managed to be successful although they face that difficulty? And in many cases, I meet brilliant people, really amazing, top-notch individuals, and they tell me how brilliant, students they were, and amazing officers in the intelligence forces, and the best, Java developer in their company. And I listen to that patiently. And then I ask them one simple question. Hey, I listened to your story. It's amazing. You've done so well. But it sounds like everything was easy for you. You've been that brilliant kid, brilliant student, brilliant officer, straight A student. What has been difficult for you? And they think for a while, and typically their first answer is, well, at college, at the first year, I got B- in physics, or something along those lines. And I said, well, that's not really hardship. So I'm looking for the individual whose parents went through ugly divorces. I'm looking for the individual who lived in a closet for a while. I'm looking for the individual who was a socially isolated child. I'm looking for people who went through real difficulty in life and became successful.
Can I ask you, so am I. The challenge is, those are painful memories to regurgitate. My parents getting divorced, my mother getting multiple sclerosis, seeing the pain, hearing her cry in her sleep every night when I went to bed. It killed me as a son. I don't particularly feel like sharing that with everyone. And, I do more now because I'm not in a job interview. But if you're in a job interview or if you're in a fundraise meeting, how do you make people share some of those very hard memories?
That's always a challenge, how to create that level of intimacy and comfort. That's one of the reasons Cyberstarts, we don't have offices. And I take meetings in my backyard, which is conveniently located 50 minutes ride from Tel Aviv in a suburb. It's very quiet. It's very different, than any VC office in the world. I sit in a converted a shipping container where I took off all the walls and put glasses. So you're sitting in the middle of my garden. It's very peaceful. It's quiet. I typically don't, dress up in flashy clothes for meetings. Everything is kind of tuned down. And I tell them about my own journey and my own difficulties and my own failures. And as entrepreneur and individual, and typically I get to connect with them. And it's not about investing. I meet people when their company doesn't exist, when there is no company. It's all about partnership. And it's almost like picking another co-founder for their team. So if we are not open and transparent with each other, then we won't be able to be terrific partners.
When you think about your painful memories that you think shaped you, what would you say was the most prescient or noteworthy one that really shaped how you are and who you are today?
Personally, I went through a real tragedy and a real pain. My daughter died 5 years ago, and that was a real tragedy that changed my life. Now, people know that, and I talk about it, and it's, sometimes it's brought up in conversations, and, that memory, that experience, and others, I think that people understand I'm not coming to the meeting with, I'm the strong, flashy VC who's going to abuse you. I really like to get to know you.
In the shipping container with the glass walls.
In a shipping container. Sorry, I didn't mean to bring it up. I thought it's you asked the question and I owe you the answer.
No, I really appreciate that, and I'm so sorry about that. But I would love to see a picture of the shipping container. That has got to be the cover for this podcast. So I totally agree. I love that approach. Can I ask, in terms of like the ideas, if they do have one, you mentioned the kind of different frameworks. If they do, if they don't, if it's bad. If they do you like them to be an insider to the problem where they've worked in the space for years and they've seen the pains? Or do you prefer them to come at it fresh, naive, but optimistic?
I don't really care. I care about their enthusiasm. I care about their energy level when they think about it. And I've done both. I've gone with, when I met the Wiz team in the previous company in Adalon, it was 2012. They came to me with an idea of securing Microsoft business applications. I thought it's a terrible idea, but I invested in the team, and then we went to do our product market fit process, which is called Sunrise, and we asked potential customers, is that a real pain point? And, after a few conversations, it was clear that the pain point is in the cloud. And securing cloud applications is so much more important, or perceived to be important by those customers, than protecting the on-prem Microsoft product. And Adalon became a cloud security company. Now, did Asaf know anything about cloud and cloud security in 2012? I guarantee you not. And, it took them 2 iterations. Adalon was the first iteration, sold that business to Microsoft eventually, and then started Wiz. And now Wiz is a $10 billion business. And So you don't have to be an expert to the field to really innovate in that field. And on the other, maybe a different example is another company called Avalor. It's a small Series A stage company, and the two founders, Raanan and Kfir, they came to me and they never dealt with cybersecurity. They always dealt, they've built data products, and they were part of a company that was sold to Salesforce for $800 million, a data platform. And we decided that they are the data experts, and Cyberstarts knows cybersecurity, so let's build a data platform for cybersecurity. And Avalor seems like a terrific company in the making. So you don't have to be an expert to really build amazing companies.
I think market timing is so crucial to building amazing companies. How do you reflect on the importance of market timing when partnering with founders?
First of all, when I make the investment decision at the seed stage, I don't think about markets, and I don't think about market timing, and I don't think about all of that. I make a very simple decision. Do we like to partner with those individuals? Do we like to be their partners? The way at Cyberstarts, we deal with market timing question, which is super important, is by running our sunrise process. And the sunrise is almost like a counterintuitive process for most entrepreneurs, because instead of going and chasing your ideas and dealing with prospects' objections and really getting to engagements and closing deals, you do just the opposite. You go and talk to a significant number of, representative customers, large Fortune 500 companies, chief information security officers. Those are the customers of most of the companies Cyberstarts invest in. You tell them, hey, here's a new team. You don't ask them what's your biggest pain point or what's your biggest need, because again, you'll get so many BS answers, it's not even funny. You ask them something. We ask them something else. We ask them, hey, this is a new Cyberstarts team that is going to spend about $100 million in the next 3 years on engineering alone to solve one pain point. That's the average for a Cyberstarts company. $100 million in the next 3 years on engineering. And we like to give you those $100 million to solve one pain point for your organization. What would that be? What's the one pain point you like us to solve for you? And that makes customers focus and listen to you, because you change the equation of power. You're not asking them for any favor. You are making them a favor. You're giving them $100 million. So whenever I give you $100 million, you listen. And they share with us that thing, and that guarantees we are not going to face a market timing issue, because that's something they need now. That's something they're going to spend money and budget now. And that, for Cyberstarts companies, solves the whole market timing issue.
I love that in terms of the phrasing, the shifting of like favor for them, not favor for you. How many of those conversations do you have before you find a discernible pattern which you're willing to bet against versus an anomalous company that has a strange requirement or request?
We typically run about 60 to 70 conversations like that in the first 3 months since inception. And then we come back and have a second set of 60 to 70 conversations with our solution thesis. So the first batch of conversations is all about the pain point. That helps us figure out what's the one big pain point we like to go after and build an important company. We come up with a solution thesis, and then we come back to those potential customers and tell them, hey, we listen to you. We listen well. This is the concept for solving that one big pain point you told us about. What do you think about it? And if they like it, we'll go build it and then come back to them in 3 or 4 months and ask them to try it out. And then they become our first customers.
When you go through this process, how are you and the founders interacting? Are you on these calls with the founders? Are you doing them for the founders? I'm just trying to understand, because it feels like you're founding the company.
I don't babysit founders. I'm not in the meetings, but we do follow up, either me or my partners, Lior, Emily, Hilal. We would follow up after each conversation. We have a system where we rate those meetings together with the founders, and we would meet weekly to discuss, what we've learned and how we should go forward with our process. The Sunrise process is an amazing process. It's a super hard experience to go through because unlike the traditional first year experience, you take all the hypothetical objections you might face as a company in the next 3 or 4 years and bring it to present. So you ask all the tough questions yourself. If a potential customer says, I like your solution, you'd respond with, why? Why wouldn't you buy it from Palo Alto Networks? Why wouldn't you buy it from Wiz? Why do you need us? And then we would ask them, how would we price it? And why it's so high? Why it's so low? What's the right channel? How would you technically evaluate that type of solution? Even before we have written the first line of code, we don't have a product. But we ask you, how would you evaluate that product? How would you run a POV for that product? So essentially, we ask all the tough questions in the first few months for the venture. And then that then allows our companies to accelerate. If you look at companies like Wiz, Island, Fireblock, Snownaim, Sierra, Avalor, all those companies, they managed to get to, significant revenue, significant ARR in the first 12 months, in the first 24 months, thanks to that process. Because you simply get a better functioning and streamlined businesses by asking all those hard questions.
Does an efficient outcome always come from Sunrise? And what I mean by that is, does it ever happen where we say, hey, that didn't actually produce anything meaningful for us to go after? And yes, we disqualified a lot of ideas, but we don't have something concrete to actually do.
Hey, first of all, one thing I learned at Sequoia is that we are always as good as our next investment. So who knows? But if you look at the current Cyberstarts portfolio, we are at, overall, I believe at 21 companies. 4 are still running Sunrise, so who knows? But out of the 17 who went through Sunrise and raised Series A, 7 are unicorns. 1 is a decacorn, and 3 got acquired. So I think the hit rate for Sunrise is pretty good.
Can I ask you, does it get easier then? With that hit rate, every single multi-stage fund will just go, we have to invest in Cyberstarts companies, we'll pay double, but we have to be in them. Like the Sequoia brand makes it easier to raise more money, to get deals. Does it get easier now you go, look how good we are, bluntly?
It gets easier to raise money and recruit talent. And fundraising for Cyberstarts is a pleasure. And I think the last seed fund, I think it took me like 90 seconds to raise the fund, 9 WhatsApp messages, and it was done. But the fundraise process itself and the company's journey themselves, that doesn't get easier. That's as hard as it was in the first summer. It's an ego destroying process. You die like dozens times during the process. It's so difficult because you hear all the reasons people are not going to buy your product. All the reasons people are not going to like you. All the reasons people are going to pass on you. And that's hard, really hard. By now, between Cyberstarts and Sequoia, like 35 times, probably more than most people on Earth. And it's still, each time I'm getting into a new sunrise process with a new team, I have to prepare myself mentally. It's super hard.
How do you get back up when you're hit down? Everyone gets hit down. I was talking with a billion-dollar founder today in the park, and he said, Harry, you will get punched hard. It's just about getting back up every time. That's all I've learned. How do you get back up when you're punched? What do you tell yourself?
I don't tell myself anything. I just feel it. I know I keep on going. I don't have to, I just feel the energy. That, I think, something we spoke about. The moment I don't have the energy, the moment I don't have the drive, the moment I have to talk to myself and convince myself that I need to, recover, that's the point I should retire. But when I simply, stand up and walk just because I'm stupid, that's a good sign that I should stay in the game.
Gili, I've run a marathon every weekend for a year. So like 52 marathons in 52 weeks. And I can tell you one thing. I have to fucking convince myself. If I just didn't feel it. I mean, Jesus Christ. I have to convince myself to everything. Like, everything is a fight against my own mind in that way. It's really interesting to hear. You mentioned some of the incredible successes there when you analyze the portfolio with the Decacon, the 7 unicorns. Respectfully, I think we learn a lot also from losses or from not having success. When you review maybe a biggest loss, how did that impact your mindset and how you think about investing in founders?
It always goes back to the team. If it wasn't clear so far, I'm a big believer in the human element here. So you think about the team and you think, where have I been wrong about the team? What I missed about the team? And I try to analyze that and learn from that and at least not repeat my mistakes. It's fine that I'll make new mistakes, but it's stupid to make the same mistake again and again. So I try to learn and move forward. And it's also a business where you have to focus on the things that do work, because so many things are fucked up. So many things do not work well. And so you simply have to focus on the things that work well and then do more of them. If you're successfully able to focus and repeat the things that you are doing well and do a little bit less of the things you don't do well, on the long run, over 10, 20, 30 years, you'll be like a god. You'll be super successful.
If we focus on doing the things that we do well and a little bit less on the things that we don't do well, if you were to apply that to yourself today, what do you think you do well? And what do you think you should do a little bit less of that you don't do so well?
Pick the right teams. Go after important companies. Those are the things we do very well at Cyberstarts. What we are not doing well, coming up with ideas, running teases on markets. You asked me what I think about AI security. What do I know about AI security? I spent only 30 years plus in cybersecurity, and what do I know about it? We are not good at matchmaking between founders. That's something that, I see other investors do, and that's a miracle to me. How do you do that?
Why do you think you're not good at the matchmaking between founders?
First of all, if I knew why, I would fix it and I would become great at it. So even if I know why, it's probably the wrong answer. The wrong answer I have in my mind is that, it has to be an organic process. It's very, very hard to create real connection that would last for, a decade plus. If you're thinking about a long-term business, and it simply works better when it's organic.
You said there about the thesis. We have a lot of large multi-stage funds, Gili, and they like to have these prepared minds. I favor an unprepared mind, being open to whatever the entrepreneur is willing to build, to be courageous enough to pursue. I think prepared minds confines your imagination and allows you to be a BCG, associate in a large fund and lose your humanity. How do you feel about the prepared minds movement and the importance of it?
I had lots of appreciation for that. I appreciate people and organizations that learn, that adapt, that prepare themselves. That's all fine. My business is different. I'm a seed investor, and I have to come in for a process with new team completely unprepared. Have my mind not be poisoned by any thought about, what they can build and what they can go after. So I think it's slightly different profession and slightly and a different mindset.
I agree. It's a different business, actually, in many respects. And I think that also very much applies to price and price sensitivity. I remember having Peter Fenton on the show, and he said that price is a mental trap, Harry. How do you think about price sensitivity when doing deals today, and when to pay up versus when not to?
And the best companies, if you look at it, were insanely expensive at seed, insanely expensive at Series A, insanely expensive at Series B, and so on. It's like almost part of their DNA to be expensive companies. We invest at seed, so even expensive seed is not that expensive if you're building a multi-billion-dollar business in valuation. But I agree that the most investors' mistakes were not to invest in the right company because they thought it's too expensive. By the way, it goes both ways. When I speak with entrepreneurs, I always tell them the Cyberstarts money is the most expensive money you can buy for your equity. Because it's a deal, they buy cash and they pay with equity. And we are the most expensive cash they can buy. So the price trap is not just for the investor, it's also for the entrepreneur. Would they pick, the best investor for them, paying a higher price in their equity?
Do you think you have pricing power now, Gili, which is founders want you so much, they will choose you at a lower price?
Potentially, but I really don't know because, most of our deals at the seed stage look the same. We don't try to twist their arm and get 1 or 2 points more just for the sake of making a little bit more. So maybe the answer is yes, we haven't tested it.
How do you advise founders on how much to raise for? I think for me as an outsider to Israel in particular, I see large seeds like $6 to $10 million, and they'll dilute 30%, which is quite different to a European company which will raise less and dilute less. How do you think about and advise founders on the right amount to raise and how much to raise for?
It really depends on the domain. In most enterprise software companies, cybersecurity included, I found out that you need at least $5 or $6 million just to get team, product built, and a small go-to-market team to win few deals. That's what it typically takes to build an enterprise software company or cybersecurity software company in the early days. And that's typically what we do. You know, if you look at the Cyberstarts pre-Series A company, if you like, a Sunrise graduate company, you'd see a terrific team that solves a huge pain point as validated by dozens of US companies with technology that works in production, where few of those customers already paid, few $100,000 for the solution. And that's the point we go in and raise Series A. To get to that point, it takes about $5 million. So it's not bad that you have $7 million as seed. It's not terrible.
Is speed of execution the single most important trait in scaling in that first $0 to $7 million range?
I think that cybersecurity is a market where being first to market is not necessarily an advantage. Sometimes it's better to be number 2, number 3 to market and come in with more knowledge, more context, and simply deliver a better product. And better product would, not just make customers happier, it would attract better channels and would translate to faster sales velocity in go-to-market. Speed by itself is not bad, but that's not the most important thing. The most important thing is really figure out product market fit. Understand the pain point. Who has that pain point? How do you explain that pain point to that individual? What's the right demo to convince them to take your product for technical evaluation? How do you run the most efficient technical evaluation for that individual to get conviction that they like to procure your software? And what's the right pricing for your solution for the pain point it solves? If you figure this out, you can move. You have a repeatable process that you can simply execute again and again and again successfully. You can raise a lot of money, put, as many account executives and channels around that, and you've got a beautiful company. In my view, that's way more important than just sheer speed.
Gili, can cash ever be used as a weapon? And what I mean by that is your competitors raise a lot of money. You need to raise a lot of money too to compete, whether it's on paid marketing, whether it's on sales team expansion, whether it's on R&D. Is cash a weapon that can be used and leveraged, or actually is it the short-term play and the long-term is different?
Cash is very important. It's building a large, substantial company is a very expensive exercise. I didn't find, unfortunately, a cheap, inexpensive way to do it. So it takes a lot of cash. Our companies need to raise a lot of money. It means that valuations should be high, because no founder would like to get 50% dilution just to get the cash they need. we support that, and we provide the platform to run fast, get faster to product market fit, which means that you create a repeatable sales machine earlier, you get to higher valuation earlier, and you are able to raise more money than the competition.
Speaking of cash as that weapon and raising more than the competition, prices seem high again. And we've chatted before, and I wanted to ask, are 2021 valuations back, Gili? And how do you analyze the state of... Yes.
Yes, 2021 is back. For the past 4 or 5 weeks, we are definitely at least in private markets, we are in a new bull run. Valuations are high, skyrocketing.
Do you think it's a tale of those that have and those that have not? Which is like, for the 0.5%, it is a bull run, and for the 99.5%, it's hell.
No, I think that once you start a bull run, that definitely the 1% would have terrific life, but that would have impact on the rest of the pack. And if I look at our own portfolio at Cyberstarts, our companies are in the process of raising probably more than $1.5 billion in the next few weeks. The impact is not just for the 1% company. It's, you see the impact across the whole pack.
Does this make you happy? I know that sounds like a strange question. Obviously, your company is getting well funded is a good thing. But
I told you already that I'm never happy.
Well, you're never happy, but 2021 valuations created a ton of problems downstream. It created a lot of very difficult situations for companies to have to live into those valuations, option pools being set so high. The list goes on and on. These were not good. Are you worried?
I'm always optimistic, Harry. I'm not worried. I'm optimistic. The market is the market. If you can raise significant cash and build a business, you should do that. That's the right thing to do. Now, it's our responsibility as investors and board members and entrepreneurs to really look at the way we spend money and have the systematic approach of building companies. That shouldn't change just because you have more cash in a bank.
It always does. Everyone's like, oh, I put it aside for a rainy day. Every great founder pulls forward a new product, hires the new data team, hires the new sales team, because they can.
There's bad behavior attached to using TikTok or Facebook. And still, as far as I checked an hour ago, they're still up and running.
If 2021 is back, it means we should be thinking as early stage investors about liquidity in some respects, because in a lot of ways, the price to value ratio is brilliant if you're a seller. Are you actively looking at liquidity options then, given 2021 pricing is back?
Liquidity is part of my business. I like to say that eventually all my companies are for sale at the right price. I'm not a collector. I'm an investor.
What have been some big lessons for you in when the right time is to sell, actually, and not to hold?
There's lots of context to the right answer here, and I'm not sure if I've made the best decisions, so don't know if I'm the one that should teach others on timing of selling. As an early stage investor, I think it's smart to look for liquidity opportunities and consider the context. The company, your fund, many other elements in your business.
Speaking of kind of the other elements in your business, I am intrigued, you scaled up Cyberstarts' fund size quite a lot over time. Can you just take me to that decision making? Given you said earlier, my business is seed, and it's that really early why on people. Now you have funds that are significant, really significant. Can you tell me about that decision making process and why you decided to scale in that way?
I'll explain it and you'll figure out immediately why I said that we are simply in the seed business and that hasn't changed. So at Cyberstarts, we have two type of funds. Seed funds, we are now investing out of Cyberstarts Seed 3. Our seed funds are $60 million in size, and we write first and last check to new teams. No follow-on investments out of the seed funds. And then we have $500 million, $500 million opportunity fund where we invest in follow-on rounds in our own portfolio companies. The whole so we didn't transform our business. We didn't shift it to late stage or multi-stage investments. We are seed investors with a big wallet to invest in follow-on rounds in our own companies where we do not set the price. So we do not set the price out of the opportunity fund.
A couple of questions. One, how do you avoid signaling to prevent others from going, Cyberstarts aren't doubling down from their 500 million fund? Can't be a good one.
So far, we invested in all Series A and Series B of our companies.
Do you expect that to be the same going forwards?
I don't know.
Do you get check sizes that you want? Because when you don't set the terms and you don't set the round, your check size is really at the whim of someone else. How do you ensure you get the check size you want when you don't own the round?
Typically, it's very easy for us to take pro rata and other investors. We have lots of friends in the industry and they respect our partnership.
In other words, they're fucking terrified to not give you what you want. I said it, Gili.
We have terrific partners.
That is amazing. Listen, I want to ask one more before we do a quick fire, I'm sorry it's a weird one, but you're optimistic. You have a wonderful way of looking at the world. I think respectfully, and I hope it's okay, but personal finances do shape a lot of one's mindset. It makes one upside inherent, not fearing downside protection. Do you think rich investors make better investors?
You know what, Harry? I don't know, because for most people I co-invest with, their net worth is not published, so I have no idea. But my guess is that the answer is rooted somewhere else. It's not around net worth. It's around terrific instincts, knowing your game, pattern matching, a terrific network, and other elements.
Did money make you happier?
It definitely made my life more comfortable.
What was the single biggest thing that changed?
One less thing to be worried about.
I'm so sorry to be so crass. Is there a number at which point that happens?
Probably each one of us has a different number. I'm sure that there's a number that would make you not worry about it anymore. And probably my number and your number are different.
Go on, I'll tell you mine. Listen, it was worth a try. I would be remiss if I didn't try it, Gili.
And I respect that. I didn't expect you not to try.
Listen, I would love to move into a quick fire round, Gili. So I say a short statement, you give me your immediate thoughts. Does that sound okay?
Perfect.
So let's start with, what have you changed your mind on most in the last 12 months?
Product marketing.
What do you mean?
I was big believer in product marketing in the early stage. I kind of lost faith.
Why? This is like a grenade in the quick fire round. That's a very bold statement. Why did you lose faith?
When I look at early stage companies, the common thread among all of them is, once they start to sell software, is that they don't have enough opportunities and they don't have enough pipeline. Previously, I spent a lot of efforts within marketing around product marketing and not around demand generation. You asked me a year ago, who would be the first hire at a marketing organization? That would be product marketing. My mind changed. My answer today is demand gen. And that can accelerate, that can make a huge impact on a business early on.
God. Saving some wisdom bombs, hey, Gili? That's a quick fire answer and a half. What's the biggest misconception of the Israeli tech ecosystem?
Selling early.
You don't think you do sell early?
That's the misconception. I think that anyone who sells early has a reason for that. It's not an ecosystem trait. It's not an Israeli trait. If you have a terrific product selling amazing to a huge market, and everything in the founder's relationship is amazing, why would you sell? So I see more and more repeat entrepreneurs, but also first-time entrepreneurs that are doing amazing job and eager to build sustainable companies.
What's the best investment advice you've been given?
Focus on the team.
Sure, I see a common thread here. What's the biggest piece of BS advice that you often hear or see being given out that you don't agree with?
Whenever entrepreneurs tell me that customers love what we do, every customer we spoke with like to get our product, like to get their hands on a product. You probably misunderstood the customer. You probably didn't listen well in a conversation. That's impossible.
What's the most memorable first founder meeting you've had?
It was a meeting with Asaf Rappaport at Adalo where he didn't show up.
Walk me through this. What happened? He just never rocked up?
We set a meeting and his two co-founders showed up and said that Asaf didn't think meeting with investors is important or something along those lines.
Ooh. Do you think founders should always be raising?
No. I think that in many perspectives, FOMO is your biggest friend as founder.
Thanks, Gili. That's helpful. Really helping my job here. I'm like, it's important to build the relationship, the trust. You're like, nah, FOMO, it's great. Tell me, many reasons why I love Doug Leone. You have a much longer history with Doug than I do. What's your biggest lessons from Doug?
He simply cares about the founders and the companies he partners with. And many people are even intimidated by Doug. And I know founders that are scared by Doug. Doug cares about the founders and investment. And that, I think that the combination of the knowing your business so well and caring about what you do, makes him very special.
Penultimate one, what do you think was the biggest sin of the zero interest rate environment? The biggest investing mistake that you saw of the zero interest rate environment?
Attaching unicorn valuations to, $1 million in revenue companies.
Final one for you. 10 years time, where's Gili then? Where's Cyberstarts then? Like, what do you want the next 10 years to be for you?
Cyberstarts, that's easy. Best investor in cybersecurity worldwide. The one go-to place for entrepreneurs when they think about starting their next cybersecurity company. For Gili, I never make, long-term plans. As I told you, I wake up every day and I make sure that I have the drive and energy to go forward.
Gili, listen, I've loved doing this. I can't thank you enough to you for putting up with my prying ways, but this has been fantastic. So thank you.
Thank you so much. Really enjoyed it.